From CGTN headquarters in Beijing, this is The Hub with Wang Guan.
Hello and welcome to The Hub. I'm Wang Guan in Beijing. The global economic growth is entering another period of heightened uncertainty. Rising tensions in the Middle East and risks to the Strait of Hormuz are sending fresh shockwaves through markets. The IMF, in its latest World Economic Outlook released April the 14th, has downgraded its 2026 global forecast of growth to just 3.1%. Against this backdrop, China is pressing ahead with its 15th five-year plan, with its first quarter GDP growing at 5% year-on-year, while posting steady gains in trade, consumption, and high-tech industries, and expanding cooperation with countries around the world. So how should we read China's latest economic data? Why are more countries deepening ties with China, and what do these trends mean for the global economy? To unpack all these, we're joined in Washington, D.C. by Rick Dunham, co-director of the Global Business Journalism Program at Tsinghua University. In New York, Anthony Chen, former chief economist at J.P. Morgan Chase. In Los Angeles, William Li, chief economist and managing director at Global Economic Advisors. And in Beijing, Liu Baocheng, dean of the Center for International Business Ethics at the University of International Business and Economics. Welcome, gentlemen. Professor Liu, let me go to you first. Let's look at the numbers. After China's goods trade hit a record high last year, a strong momentum continued in the first quarter of this year. Total imports and exports rose 15% year-on-year to nearly 12 trillion yuan, surpassing 11 trillion yuan for the first time in a single quarter, and marking the fastest growth in 5 years. Exports, meanwhile, rose almost 12% as well, from the same period last year to 6.8 trillion yuan, while imports went up nearly 20% to about 5 trillion yuan. In a complex global environment, what do you think are driving these numbers?
I think one is the Chinese strategy from the central government. And over the last 3 years, we particularly noticed that we have been shifting from a recovery mode from the COVID now into more of sustainable development with new productive forces. And this has really paved the foundation for China to be able to expand its global marketplace. Second is that we have been seeking new ways of diversifying our global marketplace, and by strengthening the relationship with particularly the global south, from Africa to Latin America, and particularly now ASEAN countries. And now the third is that we are strengthening also the regional integration program, being an active member in the regional economic partnership, and now striking more deals. Actually, we have been also in active negotiation with the Gulf countries for a free trade agreement. So I think lastly is really the Chinese attitude towards the global geopolitics that's there to win more of the support and willingness to engage with China, given that we are seeking the global peace, and we're not really offending anybody, but rather to engage and focus on the economic and trade cooperation instead of the political type of extremist type of attitude.
A steady hand and a stable partner perceived by many countries around the world. That is the perception towards China, and an increasing number of countries perceiving China as a reliable partner versus some other countries in the world. Now, let me ask you about this, Rick. What are the most noticeable trends marking the Chinese economic growth in the past year?
Well, one thing that stands out to me is that this is not just a one-dimensional export story when it comes to trade and trade volume. You can see from the first quarter numbers that there's strong two-way trade, and the imports in China are growing even faster than the exports. It shows that there is some strong domestic demand there, continuing domestic, particularly industrial demand in China for upgrading plant, some manufacturing demand and supply chain replenishment. So I think that it shows that there's some sort of resilience in the Chinese economy, and it's not just sending exports to other countries, even though that's going up too. I do think that there is something about China gaining because of two things. One is that China is considered reliable in a year of unreliable actors globally, and the second is that China, in a time when energy prices are going up, that China is the source of a lot of the alternative energy products, green energy, and in a time of AI and technology, China is a key exporter and a key producer of a lot of those products. So, I mean, I think you have a combination of these products, key elements involving both import demand and export opportunities for China.
Yeah, I also want to ask William Lee. William, you always have distinct views on China and on the Chinese growth. Share with us your observations on the Chinese economic growth data.
Well, let me just say that the IMF, and I've been with the IMF when I was there for over 20 years, producing the World Economic Outlook forecast for a wide range of countries, from the U.S. to Germany to other countries. And this is the first time I've noticed that they've been so complimentary of how China has been managed to diversify its export markets away from the U.S. and toward other Asian partners. And so that, I think, goes along the theme of what you've just been talking about, that China has found new partnerships with which to trade. But at the same time, the IMF has also said that that's part of China's weakness, because it has become so reliant, even more so, on these export markets to try to export its production surplus into these countries. And while there's been a lot of import and export trade, the imports have been industrial imports. They've not represented consumer imports, which would represent a healthy balance in China's domestic economy. So the IMF, while it's highly complimentary for China's successful diversification of its export markets, it's still highly critical that China has just not managed to get its domestic economy in gear and have a sustained increase and strong growth in its domestic demand. And that's one of the vulnerabilities I think the IMF continues to point out, not just this year, but for several years now.
I mean, China has been scrambling to address this very issue, that is to boost domestic demand, buying more from the rest of the world. We have this CIIE and held each and every year in Shanghai, encouraging foreign exporters to showcase and feature their products and services to the Chinese consumers. But I mean, let's face it, this is a issue that remains to be fully resolved. Now, Anthony Chen in New York, let me ask you about this. As China growth, and we can see about Chinese export and import numbers and figures, what do you think the Chinese market represents to the rest of the world?
Well, the rest of the world is looking to replace, say, the United States and be able to enter China and sell products. But at the same time, they're also going to be buying products from China. But one of the things that's behind the numbers, I think, is that China is moving towards more high value type of exports. So they're moving into and expanding the electric vehicles market, the ion batteries, and of course the solar, moving away from the low cost textiles, which means that when they do export, then it carries a much larger weight because the value of these products are much higher. I agree with William out there that there is some issues with consumption, but it's slow, but it is moving in that direction as China is trying to expand its service economy and to some extent try to strengthen its safety net. That will all increase consumption. Now, you can make the argument, which I think is may be valid, that they're not moving very rapidly, but they are moving in that direction. And so if they were to pick up the pace in that direction, then some of those concerns will start to wither away.
Now let's zoom in on the Chinese economy. It is certainly multifaceted. Professor Liu, if we watch closely enough, there has been this phenomenon of a sports IP plus cultural tourism model that is gaining traction, linking events, tourism, publicity, and domestic consumption, linking all these together, taking the hugely popular Suchao or Jiangsu Super League of football, soccer, for example. In 2025, total in-person attendance surpassed 2.4 million, averaging nearly 30,000 football fans per match, while online viewership exceeded 2 billion. Related topics generated over 100 billion views, and the economic revenue is phenomenal. 1 Chinese yuan spent on a ticket drove something like 7 yuan in related consumption. How do you look at this phenomenon?
I think overall, the Chinese Engels coefficient has been on steady decline, which means the expenditure on the daily utilities and functionalities has been on declining. So therefore, there has been much of the room to be able to consume on emotional based the consumption now with all the sports, with all the tourism. So there has been multiple type of drivers behind it. One is that the local government have really identified the market, and now they build the infrastructures instead of managing a specific event. Now they look at more of the attractions for deeper engagement and multiple type of consumption, from hotel services to local tourism, and also to boast the more of the vendors on online streaming. So this is more of a long-term campaign instead of managing a particular event. And the other is that on the consumption side, people are really seeking for more of the long-term engagement with the local culture, and also to have a deeper taste of the local catering in terms of the cultural relics, in terms of the local stories, and not to mention about the local specialities. So these are there to further boost the Chinese economy on the high-end service side. But still, many of the local government, local vendors need also a long learning curve to be able to manage this entire event on a sustainable basis.
It is a long learning curve, and China has been adapting. Now, let me ask you, Rick, because from sports event IPs to pop culture icons such as Labubu, the Chinese pop culture is taking part of the world by storm. China's consumer market is increasingly driven by experience, if you will, by creating emotional values and making people culturally identifying with China. What new characteristics do you observe about China's evolving economy, especially when it comes to having all these cool products exported to the rest of the world?
Well, Labubu really stands out for me. Having returned to the United States over the winter, I can see it is a phenomenon in the United States as well as in China, and some of the stores, the Pop Marts, are all around, and you can see Labubu in the United States. And I'm working with the Global Business Journalism Program students on their thesis projects, and one of the students is doing one on the success of Labubu and what would be called Chinese cute power. And the point she's making in it is that since this is a private company and a non-state actor, it actually does more good for the Chinese image than if this were the government trying to push something like pandas, because it is authentic from the ground up. And it's something that people all around the world are embracing. And so I think it's really interesting. Yes, it's an economic benefit, but I think that this is really something that is a soft power benefit for China. Even more than the economic benefit. And it's also something, just like some of the social media with Xiaohongshu, that when Americans discovered Xiaohongshu, and there was the threat to end TikTok in the United States, that you had the one-on-one communication, person-to-person communication, and I think these were some of the best improvements in U.S.-China relations, because people saw each other on a different level. Now we're getting away from economics to the social, but if I can tie this into the last point that we were making, I think that that governments in China, some of the provinces, have learned over the last few years, the learning curve that you talked about, how to communicate on some of these tourist sites or these social activities, sports activities, much better on social media, how to use social media, how to use apps to draw people in, whether it's tourists within China or even international reach, where I think that they were pretty poor 5 years ago, and even 2 or 3 years ago they were still struggling. But I've worked with the with people in Nanjing and in the province, and I've seen some really good work on media to help spread the word.
I mean, it's always good to see local government officials becoming more familiar, becoming more savvy, if you will, with social media, interacting and engaging with friends from around the world. And if you think about it, hashtag, is this a very Chinese time in your life? Has been trending on Instagram, on TikTok, and other social media networks. Now, William Lee, let me ask you about this. How do you assess the emerging soft power of China? That is a China that is more cool, that is more chic, and that is more identifiable with the rest of the world, especially the Gen Zs.
This is exactly the direction I think that almost everyone has called for China to do, to build out the service sector in China, to make it much more attractive, not just for domestic residents, but also for around the world. Cultural tourism is, I think, going to be a phenomenal boost to China's economy. And one of the things that I would point to is that if we have a more pervasive kind of policy like this that spreads to the provinces as well as being sponsored by the central government, we'll have more than just episodic. Because right now, these policies are very episodic. They have these a big thrill and then it sort of fades away. What needs to be done is to sustain this on a longer term basis to get that domestic economy growing. And I think one of the ways to free up the amount of money that people want to spend on these cultural experiences would be to lower what we call precautionary savings. People are saving money because I'm afraid of retirement. I'm afraid of losing my job. I'm afraid that my housing wealth is going to fall again because whatever real estate I have might fall in value. Those fears are keeping people from spending on these experiences, and some support programs that would eliminate these fears would go a long way to sustaining the growth. Because right now, as great the direction as these policies are, they're complementary to the kind of policies that I've called for before, which is more social programs, social safety nets that assure people that if they were to lose their job, they won't fall into poverty, that there's a safety net that catches them. That is a complementary kind of policy to these sports and cultural tourism things. And one is not a substitute for the other. They're complementary. We need both of them.
Now, good points taken. Now, Anthony, let me ask you about this because high-tech sectors are one of the most important features of the Chinese economy in the modern era. It is expanding with strong gains across manufacturing and services, with sales, for example, sales revenue from January to March rising nearly 15% year on year. High-tech manufacturing and services saw revenue growing double digits, respectively. How do you assess the rise of these so-called new quality productive forces of China?
Well, I think these new quality productive forces is a positive trend because it really allows China to offer something new and something exciting. The high-tech sector, not only does it have much greater value in the GDP numbers, but it also gives China an opportunity, not just within China, but also outside of China. So moving in that direction is an important development, and I think something that China should continue to do. In addition to the other things that have been mentioned, all these things put together are going to continue to sustain economic growth. And even though we were excited, people are excited about the first quarter GDP, it seems like we should not lose sight of the fact that the whole global economy is going to have some headwinds because of the Middle East tensions. And you could see that not only by the IMF numbers being revised down, but the OECD numbers before that, a little bit before that, also were revised down. So I don't think any country is going to be able to escape that. So yes, we should get excited about the first quarter, but there'll be some negative headwinds. So these developments of future industries, the high tech sector, very, very important to cement a more positive, some more positive momentum for China moving forward beyond the next quarter or the next year. This is long term, and it's important that China continues on that path.
This is a long-term game and it requires cooperation. Now, Professor Liu, the latest Middle East tensions have put energy security back in the spotlight. What lessons does this moment offer globally, and how does China's push toward a greener and more diversified energy mix contributing to global energy stability?
I think it's a high reminder that the going for green transition is no longer there to contribute to the climate change issue, but also more of a national strategic stability issue for its industry and for its livelihood. So I think now this is really a major shift. And now in terms of China, China is still heavily reliant on import of oil and gas from the rest of the world, but we are able to diversify our supply. So those who have been dependent on global supply, but they more of a hinging on a single or one or two supplies, and then they are really having a big worry and even big trouble that is lying ahead, given the disruption that is going on. And now China is also there to seek more of the alternative energies, by taking advantage of the vast landmass, particularly in the Xinjiang area and the southeast part of China. And third is that we have really implemented a very successful transmission of the power program by boosting the China power grid, and also for those energies generated in the western part of China, they can really transmit without much of the loss on the transition to supply to the coastal area. And then because China is also very rich in the coal, so therefore that gives the China's confidence just in case of further the intensification of global politics. But we are also there to input more of the artificial intelligence and more of the energies into generating the coal in a green fashion to be able to supply China's bottom line in its industry, because after all, China as the global manufacturing hub, we are still the high consumers of the energy part. But in the meanwhile, we're also taking care of the environment by being able to deliver to the carbon peaking and neutrality goals that we have committed to China and also to the rest of the world.
I mean, making China green has been a campaign years, even decades in the making. In 2025, China's non-fossil energy surpassed oil as the country's second largest energy source and became the main driver of energy growth. Now, Rick, let me ask you about this. As the current oil crisis unfolds, what was once criticized as overcapacity is now proving to be a key buffer against external shocks. What does this contrast reveal about strategic foresight behind China's long-term planning, and what strengths in China's development model does it reflect?
Well, I think one thing it tells us is that the debate over capacity may have been a little bit misleading. It was correct as far as it went. That if we defined overcapacity just as within the narrow context of supply and demand at the time, China had overcapacity, but China has a strategic buffer that a lot of the world doesn't have. It looks very different. Overcapacity looks very different in a crisis like that. And in strategic sectors, the surplus means resilience, right? China is much more resilient than other countries right now. And it means that China has insurance. And China has insurance in the sectors that we would care about: alternative energy, green energy. It has, as we were just talking about, even something like coal. China has more diversification of energy supplies, so that if there is a crisis, China can weather it more easily than, say, a country like Japan, where cutting off the oil from the Persian Gulf is a true crisis. I mean, and an immediate crisis, or even a country like India. So I think what we would consider overcapacity, we have to redefine the thought, and when in the future, when we discuss overcapacity, I think we have to keep that in mind.
Exactly. Now, William Lee, how do you look at China's evolving energy mix, especially amidst the current chaos in the Middle East?
Well, as everyone has said, China has been very lucky in having a tremendous storehouse and reserves and flexibility to be able to go from one power source to another. But again, China doesn't live in isolation. China lives as a member of the global economy, and as it's just learning the importance of its Asian neighbors and their health is absolutely vital to China's exports. So it's not just ensuring that China is energy independent, but ensuring that its trading partners are also able to get a free flow of energy is a very important part of China's responsibilities. And I think one of the things that China really hasn't stepped up to loudly enough is to ensure the safe passage and free passage of not just energy, but all of the materials like fertilizer, helium, which is so vital for the production of advanced semiconductors, all of the other kind of traffic that goes through the Strait of Hormuz is something that's vital, not just for China, but because, as you just said, China's quite independent of all that energy trade, but its partners are highly dependent, and its partners, newly gained partners in Asia, would really appreciate China stepping up and saying, hey, let that traffic flow. And China really hasn't been loud enough in ensuring that its neighbors are also able to survive the shock.
Now, Anthony, you have the final word. We have about 1 minute left. Regarding the states of the Strait of Hormuz, the tit for tat between Washington and Tehran, what's next? I mean, China has been called into the game, but China has been, a reliable and steady partner in all this.
I think what's next is that it has to be open, because there are almost 20 million barrels, whether it's a combination of oil and natural gas, of energy products. And even though Saudi Arabia is pushing through its east and west pipeline as much as 7 million barrels after they fixed up after a little bit of damage, and the UAE has and also an alternative route to be able to push 1.5 million barrels, that still leaves at least 11.5 million barrels shortage. And the longer that the Strait of Hormuz stays closed, the worse it's going to get. And as William Lee talked about, the rest of the global south and the rest of China's neighbors, in some of those countries, they're actually now facing shortages. And that means slower economic growth. And if they grow by a slower pace, that means that they're not going to be able to buy as many products. So we need to open up the Strait of Hormuz. We need to do that as quick as possible.
All right, gentlemen, thank you for your insights, and that will do it for this edition of The Hub on CGTN. Thank you so much for watching. Our programs continue on CGTN. Stay tuned and see you next time.